Okay, welcome to another update. Today is Wednesday, December 9th. All right. And I want to actually take this time to talk about today specifically one concept, and that's drawdown. And that's something that a lot of us don't like talking about or dealing with because of what it has, what it's associated with. Okay. Because there is an aspect of drawdown that can be extremely frightening. I will admit that. But over time and through experience, especially with dealing with the market, but more specifically dealing with the strategy that we have here, I just always want to keep everything in that perspective, keeping everything according to the strategy of current market value, current market movement, also known as the Forex helper strategy. Okay. So when we look at things from that perspective, understand this, that no matter what strategy you use, you're never exempt from the market storm. In other words, if you participate in the market, understand that you're also going to you should anticipate storms. That's just part that comes with the territory. Okay. I always use the analogy of going out onto the open seas. I don't want to take too much time using that right now, but I'll just briefly say it. If you're going to go sailing out on the ocean, expect to deal with the elements, with the waves and whatever comes. When you're going to go out there, don't go with the assumption that you're always going to be going through smooth sailing. All right. So one thing that I do want to say, I'm going to go over these notes, and it's very important for you to follow along. So I want to specifically focus on profit phase and drawdown phase from a general point of view, because even that is broken up into different aspects, because you have the drawdown phase and profit phase from the current market value perspective, which is long term. Okay. And then you have the drawdown phase and profit phase from the current market movement perspective, which is a more shorter window. Okay. So I'm going to just speak from a general perspective, just understanding the concept and just that principle. So when we go and when we take part in the market, understand that you'll have to go through drawdown. Now, there is a storm taking place right now, and that is happening. I'm going to go over this on this video so that we can have a better understanding, especially from the fundamental aspect of things, the more short-term relevant aspect of things. That's usually what we experience when we do experience storms. That's the one that's mostly felt the hardest, is the storm that you're currently in. All right. That's usually the one that you feel the most because you're in it at the moment. So when you're in it at the moment, there's going to be a lot of things that you're going to have to deal with. Not only that storm, but what you're really actually dealing with is you're dealing with yourself. I mean, ultimately, if the storm on the outside creates a storm on the inside, then see, that's where the challenge is. You're going to have to deal with that part. And now you're going to be dealing with a double whammy, if that's the case. Okay, let's make sure this is recording with the volume on. Okay, good. So the challenge is not only dealing with the storm on the outside. The storm on the outside, you can deal with that. I'm going to talk about that now. And that's just risk management. You deal with that by making sure that your margin level percent area is where it needs to be. So when you're placing your trades, and here's the margin level percent area. Let's see if I can open up this photo. And that's this right here. On your MetaTrader 4 account, you'll be able to see that. And it says margin level percent, and that's that line right there. And we follow that line, and you notice it's above 1,000%. Now, during the storm, it's going to go less. It's going to go down a bit. Now, depending on the type of storm or how heavy or how aggressive that storm is, there's different categories of storms, okay? So if it's very, very heavy, you'll start to see it drop a little bit more. And you don't want it to start off at, 300%. Because if the storm is just an average storm that measures a 200% drop in your account, then you're going to be really close to wiping yourself out. Because once you get to 0, you're gone. Okay. And some brokers, once you get to 300%, they wipe you out. All right. So if you're at 1,000 and you go down about 200 on that kind of storm, you're going to be at 800%. You're still going to be good. All right. Now it's just a matter. Now let's talk about dealing with the inside storm. Now, if you're the type of person that this is where experience comes into play, experience, especially experience with this strategy, experience with what we have here, stick to it. This is a part of it. You're going to have to deal with those storms, and that comes through experience, and that comes through something you got to deal with over time. You deal with so much of those, you get used to it. Okay. You may not get to the point to where you're completely immune from it. That takes much more time and experience, but you're slowly, surely getting there. It's a journey. So keep that in mind. That's very important. Very, very important. Because one thing you'll notice is this. At the end of it, you'll know this one lesson after every storm. Wow, I got through it. Once you get that aha moment, whoa, it was crazy, but I made it through. My account made it through. I made it through. And my account made it through. Okay, so you're dealing with this on two fronts here. Two fronts. Outside and inside. The storm from without and the storm from within. Keep that in mind. All right. Now let me get off that. Margin level percent. So here with the Forex market, definitely we started to see that this was coming anyways because the MAS score started to drop. Last week we saw just barely touch the 50%. I mean, it touched the 50%, which is a sign of the overall Forex market itself. This is the sign that the overall Forex market was about to enter into a whole nother type of territory, a stormy territory, and I was even thinking about changing the color codes to where 50% to 60% really should be the blue, because you're in that range, and 50 to 40 is that blue, that storm. Okay. And then below that, 30% and lower would be the red, 70% and higher would be the green. You see what I mean? So if that was the case, you would have seen all pretty much blue here, which would have indicated, man, we're about to enter into some really choppy territory in the Forex. All right, there's a lot of these little indicators. Keep in mind, guys, I'm talking to you guys that have access to this report. When you read the report, I've already talked to you guys about the stressors. You're already noticing from just the extreme stress marks. But today in particular, big time extreme stresses. And I'll go into the reason why that is. Okay. And I'll also go into one other part at the end, explaining when that storm will subside. There's certain characteristics of these storms, and I'll talk about that too. Let me try to get through this quickly as possible, but still explaining as clearly as I possibly can. Okay. Commodities. If we were to take that approach, we would have also seen the same thing would be true here. Still, there's trouble in paradise in the commodities market as well. All right. If I were to make this blue, if we were to look at that range. Okay. So that range where we're at right now, it's still not in the highest range of profitability, or I would say least volatility. All right. You'll find a lot of resistance, and there's a storm brewing in there. The cryptocurrency market just completely is going insane in the storm. Okay. For those of you who want to know where it's going, and you're one of the ones that are hearing one thing, and it's not that, because the market, I highly encourage you to get access to this report. This will help you. This report is also an aid in this. If I'm talking about that storm from within, you're relying on our resources to give you the knowledge so that you can have plus time. The knowledge that we provide plus time, tested time, will be able to, over time, give you that sense of a degree of comfort, because number one, you're used to using this resource, and you've seen it over time succeed for you. All right, so that should give you some level of ease in your journey in overcoming and understanding all of these market movements. Okay, so we see that in the cryptocurrency market, everything is unaligned here. That's what that zero represents. There's nothing aligned anymore. There was one cryptocurrency that was going against all of the other ones, and it finally gave in today and followed suit. Okay, but that's from current market movement, guys. By the way, I just want to let you know, as far as cryptocurrency is concerned, that's what's caused the unalignment. Indices market, we last week, very great. We seen a small, slight dip, but not really that big of a dip. But here this week, okay, started Tuesday, that dip beneath that 70%, at 67%, then going to 60% as of today. So we're definitely seeing trouble in paradise in the markets. Now, let's get to the next part. Why? Why is that? Why is that? I've mentioned before that the fundamental analysis, researching what's going on in the news, researching what's going on in the world, that is the key to really understand what's going on. Of course, you would have to dig deep and go into in-depth research. We do have that opportunity, but we don't have the luxury to go into extensive in-depth research. But we go into enough research to understand what is going on, what's causing the storm. All right. And let's take a look at just the indices market itself. All of the world markets, you can see, are dipping below. The NASDAQ is probably the hardest hit one right now, with a 2% drop. Right, a 2% drop. Now, of course, the 2% drop, it adds up, especially if you're dealing with this storm on every market. And that's what we're seeing right now. We're seeing all markets around the globe right now being hammered. All right. You can see that from the MAS score that I put up there, that I just went over. But here, from Trading Views, the Trading Views list of the indices, we see that all the global markets, all the global stock markets are really being hammered right now. And now let's kind of get into the reason why. Obviously, it's because of, again, the short-term fundamental news reports that we see right now, which plays very heavily on current market movement, guys. Of course, it affects current market value as well, but more short-term definitely affects current market movement in particular. And we can see a lot of negative press, especially today. There's tons of negative press, primarily due to what's going on with, the virus and everything. So we realize that. But if you look at just today, all the news that are coming out, a lot of these, there's mixed reports. I mean, as far as what some economists are saying, but overall, the majority of the economists are seeing situations take place as a result of what's going on with the pandemic. But I also wanted to mention one other thing. Notice here, the dollar, if you go to our report, we didn't add any dollar trades on the top picks. We ended up adding the Japanese yen because that one's starting to cave, which puts some of the other pairs that it's paired with in our favor, primarily the Canadian and the Australian. So that's added back on the top picks. There aren't any warning markers on those two because they're more solid. They're much more solid than, let's say, the Great British Pound. We're seeing some movements with the Great British Pound. Hopefully it'll move into a solid territory once we see what takes place with the Brexit. There's a Brexit summit today. So that's a very, very high economic impact on what's going on with the Great British Pound and relations with the UK. But here with the US dollar, whenever the US dollar tries to regain its strength, right now it's in a slump. It's been in a slump. Okay. But whenever we see that extreme stress, if you go to the report, there's an extreme stress on the US dollar. So that means it's definitely going opposite its value, its current market value, which is a sell. So we see that extreme stress today reflecting on current market movement, attempting to go against that downward spiral that it's in. Whenever the dollar does that, it automatically shakes everything up. So we're seeing not only that being shook, causing the markets to be shaken, but news on top of what's going on with the stimulus in particular. All right. So the stimulus in particular and news reports on the let's see, we got some more news reports on that too. U.S. stocks turn lower with focus on the $916 billion COVID relief proposal. U.S. stocks trade lower as investors sell big tech to pick up COVID-19 bargains. Okay, so we're seeing a lot of manipulation on Wall Street, getting rid of the tech stocks in order to make money, leveraging themselves, all about themselves now. They're leveraging themselves to pick up some other bargains, probably Pfizer and all these other subsidiary companies associated with making money on giving out the vaccines. I mean, so we're seeing this huge movement, this huge shift. Now, at the same time, we're seeing a market shift. We're in the middle of a market shift right now. By me showing you guys what's taking place with the MAS score, all these markets, they're shifting over to another phase, okay, of direction. And we're in the middle of that. So you're gonna be able to anticipate that. There was one more thing I wanted to show, and that is the market shift on that. Let me see if I can find that photo on there. Maybe I didn't take it. Okay. That had to do with the, actually, let me see if I'll actually go there instead of taking the photo. Let me actually go to the, volatility index, guys. So the volatility index definitely went up. It wasn't that volatile, but I will bring it to my last and final point. So the volatility index, let's go ahead and take this here and crop that out. This is the volatility index. And I'll go over the photo, add it to the thing here. All right. So we have the volatility index here, and this is for the current market movement. It's sky high. Okay. So definitely the markets are extremely volatile just based on the volatility index. When we did the research on the report this morning, we still had the current market movement volatility at a sell. Right before I made this recording, I went back to the research table and I seen the volatility index just jump crazy. All right. So we ended up changing that from a sell to a buy, which is a new trend. It was definitely an extreme stress takeover, big time. took over. And that's what we're seeing right now, guys. Now, what is the solution? The short-term solution is this. For those of you who are wondering, oh my goodness, what should I do? Number one, make sure your margin level percent area is 1,000. I already said that. That's one of the first things. That's the first line of defense. Number two, wait until the U.S. market is done with. Okay, most of the volatility is, look, you got over here. Let me illustrate this. You got different levels. I talked a lot just now, but I mentioned at least more than 3 different levels of volatility. Number one, you have the volatility of just the markets themselves being unaligned, okay, going opposing forces. When you have opposing forces, you're going to have extreme volatility. You got a bull and a bear just going at it. You're going to have that too. All right. So just the market unalignment. So you got that aspect of the volatility. Then you have the dollar itself. Now, the dollar is the world's reserve currency. So just that by itself, when it's opposing its very own force, that's another element of volatility. Then you have the negative press. All right. You have the negative press behind what's going on with, the pandemic. And then the unalignment, that's in all markets. Okay. So we got that. And then we have the opposing force of the world's reserve currency. All right. And then you have the negative press due to the whole pandemic situation. All right. And then on top of that, just us being in the U.S. market by itself, okay? The U.S. session is the most volatile session regardless. That's always going to be the case. All right. So that the U.S. session and the and the UK session, especially when they merge together, there's some time when they actually merge together. That's just always going to be the case. Okay. So we got 4 levels of volatility. All right. And the volatility index just on all 4 levels just completely is, this is like one of those, noticeable earthquakes kind of thing, noticeable storms. So wait till the U.S. session is over. Once the U.S. session is over, that will at least give us another clearer view. Unfortunately, we still got to wait to see how it affects the commodities market, because a lot of the data, especially in the commodities market, it ends up being delayed. And once the other market session starts, you don't necessarily see it right away. You're going to actually have to wait till like towards the end of the Asian market session and as we're going further. So if I'm going to say like my time frame around 6 p.m. Pacific Standard Time, you're going to start to really see what's going on with the gold and silver. And I didn't really talk too much about gold and silver. Just look at the report. We're still good on that. Obviously, we're seeing some stressors, but those stressors are not due to specifically any kind of stress on gold and silver, which is crazy. But it's all because of the dollar, because gold is automatically paired to the dollar and silver is automatically paired to the dollar. So you got the dollar attempting to go against the grain. Well, guess what? It's going to cause problems with gold and silver as well. And I think there's a report there as well. Gold prices slide, threatening recovery from 5-month low. It's a threat. So we definitely see a 1.90% there, 3.12, and oil prices and the Dow signal confidence in a normal economic recovery for COVID. All right. So that's pretty much it. I said all I needed to say. I know I talked kind of quickly, but hopefully it was very clear. So guys, that's it for now. We will be seeing you on the next update. If you have any questions, you know what to do. Contact us, okay? See you on the next update. God bless.